All right, ladies and gentlemen, good afternoon and welcome back to the 3 p.m. session. I hope and I trust that you guys are doing well. Welcome back, everyone. This is the third trading room for the week, or for the day, for the day. This is the third trading room for the day. We had one at 12 p.m. and then one at 9:30. All right. So this is the third one at 3 p.m. All right. Let's see who's in the house. We've got AV Trader, Jules, Bakang, Shirley. Welcome back, everyone. All right. Midweek. It's midweek. The markets are moving. Our setups are moving. What we spoke about since Monday is moving. All right. So we're going to go through the charts. And what I said in the previous session is that, our direction is still there. All right. We're just waiting for setups to form. So while we're waiting, I'm just going to give you guys just educational nuggets for you guys to chew. And we hope as the Academy that is going to elevate and accelerate your progress, basically accelerate your progress. So that's what I'm going to do in this session. We're going to do some updates. But before we get started, if you're joining us for the first time, we welcome you to the community. On the thumbnail, you guys are going to see the schedule. All right. We do have the 9:30 session, the 12 p.m., the 3:30, and the 6 p.m. session. So you will see the schedule. All right. And if you want to open up an account with us, our website is tdmarkets.com. tdmarkets.com. All the links are on the chat. TD Markets Academy. We do have Academy, our education as well. So if you guys want to learn how to trade, how to read the charts, and how to go about doing things, we do have the Academy. That is TD Markets Academy. We've got the link on the chat. We have our crypto link as well. If you guys want to trade crypto derivatives in our platform, the TD Markets Exchange, the link is on the chat as well. All right. So everything is there. You can also follow us on all social media platforms, Facebook, YouTube. You can also follow us there. All right. So yeah. So let's get right into it, guys. Let's get right into it. Let me see who's in the house. We've got Particles as well. Welcome. All right. I think we're ready. I think we are ready. All right. We're going to jump straight into it, guys. Let me just share my screen. The markets are moving. The dollar is moving. In fact, the dollar is moving. The yen pairs, we are waiting. All right. Let me just share my screen here. Great stuff. So we are keeping an eye on the commodities, the indices, the yen pairs, and then we've got the dollar pairs. All right. So look where gold is. Look where gold is. 100% spot on. Right. Many of you guys might have left this trade, but remember, don't forget this one. Right. We are waiting for this one. So if you left this short-term sell, the buy is coming. So gold as well. Gold is breaking. Although I feel like gold will give you a trade. Gold is going to give you a trade back down to this low. Sorry, this is silver. I meant to say gold is gone, but silver has the potential to give you a trade. All right. So with gold, I think if you're not in gold, just leave it as it is. But silver is the one, right? So we broke out of this. So we're coming back down to this low. All right. And then if you look at the indices, US 30, they are not moving. Gold, Nasdaq and US are not moving. Look at US 30. It broke, but still came back down. So Nasdaq seems like it's going to invalidate our setup. Look what happened. It's going to invalidate our setup. Right? Yeah, US 30 as well might just go down. So it seems like with Nasdaq, we need to give it a bit of time. Let's give it this whole day. Let's see how this daily candle is gonna close. Right, let's see how this daily candle will close. US 30 as well, it's not moving, it's still on the same area. So just manage your trade, and let's see how it's gonna close. All right. Mandisa, good afternoon. Mandisa, welcome to the session. So I'm not gonna do anything on Nasdaq, right? It seems like we didn't get our direction, so let's just leave it. Let's see how the daily candle will close, and then we'll take it from there. But you guys know we are looking for this. We are looking for upside. Yeah. So US 30 might also go down. So yeah, I think let's give them one more day. All right. But in terms of gold and silver, these ones are moving. Gold is moving. This is where it is. This is where I want to close my trade. All right. Silver is also coming back here. So there's an opportunity on silver to catch some short-term sells on silver. Gold, I'm going to close this short on gold. Right. I'm going to close this sell on gold, and then I'm going to look for a buy. I'm going to look for a buy on gold. All right. And then the JPY pairs, guys, the yen pairs are still correcting. Nothing has happened as yet. We've got the Euro JPY, the GBP JPY. So let's start with the Euro JPY. So Euro JPY, this is where it is. All right. It seems like it's still going to come back down one more time before we push up. Right. So for me to look for buys on Euro JPY, I want it to come back down to this low. Right, before we go up. So where it is right now, I don't think I'm going to get a trade. I'm looking for a buy. All right. So Euro JPY is still the same. Pound JPY, let's give this one a day, maybe 2 days. Right. We're waiting for it to come back down to the zone. So we will look at GBP JPY on Friday. Yeah, I think by Friday we should be getting something solid. We've got CAD JPY at any point around the zone. It's likely gonna go up. Right, somewhere around the zone. So yeah, so still looking for a buy on the zone. All right, and then we've got NZD JPY. NZD JPY also. So they're just taking time. The yen pairs are correcting. Once they're done correcting, we are going to see a move like this. When they are done correcting, right? Obviously going up from these zones. Right there. So we're waiting for that. You know, a big part of trading is to wait. Hey, good afternoon, Mark. Good afternoon. Welcome. All right. So the yen pair is still the same. The Swiss yen, yeah, it's about to create that low. So we are preparing for this move. All right. So all the yen pairs, I see there's something here as well. So all the yen pairs are correcting. All right. So all the yen pairs are correcting. So You know, when the market corrects, the market tends to take time correcting as opposed to impulsing. So what you're gonna notice is when the market is moving in an impulsive phase, it tends to move quicker than when it's correcting. So the correction takes time, right? So I wouldn't be surprised if today the yen pairs are correcting, and then tomorrow, only tomorrow, that's when we get our continuation up. Like Swiss yen, I wouldn't be surprised if this corrects, and then after that it moves towards the upside, but tomorrow, right? So yeah, so corrections tend to take a bit of time. So that's Swiss yen, NZD-JPY, waiting for that. Obviously gold and silver, so you must look for your setups on silver. If you want to short-term sell this, you must look for your setups. Whoa, look at what's happening. Look what's happening. All right, so look at where gold is. Pinpoint. So now we are now gonna prepare for buys. Right? So as long as it has broken this low, anywhere around the zone, we are looking for buys now. Silver is also coming back down to this low. All right. So yeah, let's see. Alright, can you please check? All right. So Sakila, you are on a sell on NZD USD. The last time we looked at NZD USD, it was trading inside the range of a candlestick. So let's see if it broke that range. Okay, so yeah, so this was happening. When we looked at NZD USD, it was trading inside the range of, okay, let me just zoom in, of this candlestick. So I'm on the daily time frame right now. This is the daily candle. The current candle is the daily candle. All right. So you are in a sell at the moment. All right. So you must watch out for the following. All right. So you see the current daily candle. It is now trading below this candle. Right. In fact, the past two candles, it is trading below that. All right. So because you're in a sell, what you would want the market to do, you would want the market to close below the lows of the previous two candles, which is the green one and this shooting star. So this is where the lows are. Right? That's what you would want, because what's going to happen after that is that if you go to the lower time frame, you're going to get a move down as such. All right. So if I was in a sell, my take profit would be, so first of all, the reason why I would sell is because I would anticipate that price is going to, the market will come back down to this area, 0.59, which is this zone, right? The reason why I would sell is that I would anticipate price to come back down to this zone. So this would be my ultimate take profit, right? So now I can see that we also have some few areas we can use as take profit before the market gets to that low, which is this. So this low here, right? I would use this low as one of the TPs as well. I don't know where you got the sell exactly. I don't know where you got the sell, but I want to show you this. You see where the market is now. It's trading around the bottom of this structure. Right. I don't know where you got the sell, but you should be making some profits on this one, right? So look at where it is. So just be careful. We could get something like this. We could easily get something like this. We could easily get something like this. Yeah. Great stuff. It can still break and go a little bit lower before it does this. But as long as it broke this low, let me show you. As long as it broke this low, there, right, it can still go up. So anywhere around this area, it can still go up. This is what I spoke about earlier on during the 12 p.m. session, that we've got the formation here, right? So just be careful of that. Just be careful. If you took a sell where the market is, yeah, that might be a problem. Yeah, if you took a short where the market is, that might be a problem. That could be a problem, in fact. That could be a problem, right? I wouldn't sell where the market is. So keep an eye on those levels. Keep an eye on those levels. If you look at GBP USD, look at what GBP USD has done. It broke down, exactly what we spoke about. So I'm not in a short on GBP USD, but I'm looking for a short. So if you look at the daily time frame, the daily time frame is broken out of this. It is broken out of this. All right. So, it hasn't closed below it, but we would want it to close below the zone. So GBP USD has gone down. Euro USD has also pushed a little bit towards the downside. So remember with GBP USD, we spoke about, we are keeping an eye on this possibility. We are keeping a close eye on this possibility. All right. But we're going to take it one step at a time. So let's see what's going to happen. Yeah. All right. Cool stuff. So that's how NZD USD is looking. That's how NZD USD is looking. Kele, whenever I do my analysis, I'm also looking for long-term swings, right? I'm always looking for long-term swings. So what I would say to you is, CAD JPY has this long-term swing there. So CAD JPY, we are looking for this long-term swing. So that would be the first one. So the focus would be looking for buy trades, buy trades. If you're looking for a swing, you're looking for buy trades. So CAD JPY is one of them. NZD JPY is also one of them, another one. So the first one is CAD JPY. NZD JPY, this is the swing, the long-term swing we are looking for right there, right? I mean, we've been looking for this from these areas. So it has gone up, in fact. So this move is not done. It's not complete. All right. So NZD JPY, CAD JPY has gone up. Right. So this move is not done. So what I would say is NZD JPY, CAD JPY, and then so these ones are going to be ready very soon. And then the commodities are completing a correction. So you see the long-term swing on gold and silver is this. The long-term swing on gold and silver is this move up. All right. So that's another swing. So I'm anticipating, well, my focus is to look for long-term buys on gold. So at the moment, I'm short-term selling gold at the moment. I mean, it has gone down after my entry. So I'm looking to take my profits now. And once this correction is done, I'm looking for a continuation of the current bullish structure towards the upside. So the long-term swing on gold and silver is actually upside, not downside, but upside, right? I'm still swinging silver as well. I'm still in a long in silver. So silver, this is what we are looking for. Silver, this is what we're looking for. All right. So NZD JPY, CAD JPY, gold and silver needs to complete the corrections, right? So maybe next week we would, the commodities might continue going up next week because they need to complete this. But gold and silver, they're going to be ready very soon. So my top two is actually gold, not gold, but CAD JPY and NZD JPY. These are my top two pairs. NZD JPY. Yeah. So these are the long-term swings. I mean, we've been talking about these when they were around these areas, right? If you guys remember, we spoke about NZD JPY when it was going up here. We said this thing is going to go up. So it has gone up. CAD JPY as well. When it was around these areas, that is going to go up. So it has gone up, but this move towards the upside is not complete. So yeah, so NZD JPY, CAD JPY, these are my top two. These are my top two. All right. Cool. So guys, what we did, because we did the analysis on Monday, so most of the work is already done, right? Since Monday, most of the work is already done since Monday. So right now we're just waiting for setups. We are doing updates, waiting for setups, but most of the work's already done. So yeah, so this is how things are looking. Direction still the same, yeah? All right. All right. So what I want to do in this session, guys, while we're waiting for these setups to play out, I mentioned during the 12 o'clock session that I want to give you guys some tips and some tips and some hints. All right. Some tips and some hints. And we're hoping this will elevate your trading. GBP AUD is also downside. Yeah, GBP AUD. I'm actually holding a short on GBP AUD. So GBP AUD is actually downside, right? So this one, we are taking this piece by piece. We are taking this one piece by piece, right? Although, according to the current structure, it can still go down, right? But we're taking it piece by piece. Piece by piece. All right. So we spoke about a short earlier on. I think it was on Monday or yesterday. We spoke about a short. So yeah, so GBP AUD is also bearish. Also bearish. All right. So that's GBP AUD. All right. Cool. So let's talk about this, guys, right? Let us talk about this, right? So what I want to give you guys is like five lessons. I want to give you guys 5 lessons, all right, that a trader should learn either at the beginning or while they're still trading. They should learn, all right? So I want to give you guys just what I would say the top 5 lessons from a trader. Some of you guys might already know these lessons, but they are very important. They are very important, all right? So hope you guys are ready, all right? Hope you guys have your notes. You're going to write this down, all right? So the first lesson, ladies and gentlemen, all right? The first lesson in trading, the very first lesson in trading is to protect your capital. Protect your capital. Protect your capital. The very first lesson in trading is to protect your capital. That's point number 1. What capital are we talking about? We are talking about whatever risk you take in a trade. Forget about the profits in a trade. So you know what happens? When you take a trade, you're going to focus on how much you're going to make on the trade. And then you're going to neglect the risk you take on the trade. So that's not how you do things. In trading, whatever risk you have on the trade, you must first have a strategy to protect that risk, that capital, before you make your profits. I'm sure you guys have learned. I'm sure you guys have heard that in trading you close your losers quickly and then you let your winners run. I'm sure you guys have heard that somewhere. You close your losers quickly and then you let your winners run. That's true, right? But when you take a trade, don't focus on how much you're gonna make on the trade, because the reality is, you can make a lot more on the trade. That's the reality. What you must focus on is protecting the risk and let your trade run. That is the first rule in trading, the lesson. Always focus on protecting your capital. Don't worry about the profits. Protect your capital first, and then you will then focus on profits. Don't let it be the other way around. Don't focus on profits and then the risk. Because this risk, guys, it comes from your account. It's the money you have. It comes from your account, the money that's in your account. You see how it is? So, this is extremely important. Extremely important. I can see, Mark, you are saying my losers close quickly because they race too much to crawl. Yeah, so Mark, you know what happens there, right? I mean, I've been in that situation where the markets would take time to go to your take profit, but they would quickly go to your stop loss, right? That means you need to work on your entries. You need to work on your entries. Yeah, that one, you need to work on your entries. Look at your entries, improve your entries, because that's a problem right there. That's a problem. And if you're not aware, it might not feel like a problem to you, and it might halt your progress. It might hinder your progress. It might slow you down, right? So trust me, that's a problem right there. So what I would say is, go back and look at your entries, where you normally enter, what confirmations you get for your entries, because it's the confirmations. What confirmations you get for your entry. What confirmation? Yeah, no, look, entries are a problem, right? But the moment you figure it out, and it's not about figuring out, You can figure out how the market moves, but the entry is you can't figure out your entries unless you've got a good system. And it's not about having a good system, right? I think, let me speak on the entries quickly. Ash has been telling me that for years now, still haven't gotten it right. I think it's because I tried to. Yeah, if your stop loss is too close, then that's the problem. That's the problem. Risk 1 to 2 risk and reward. Okay, so let me do this. Let me combine your situation with AV Trader 99 situation, right? Let me combine that. So AV Trader, you say entries are a problem, all right? And Mark, you say you try to maintain a 1 to 2 risk to reward ratio, but then you tend to put a small stop loss. So meaning your stop loss is close to price. Okay. No, I understand your issues, right? So this is how it goes. All right, let me see how I can package this for you guys. Let me see how I can package this. So when it comes to your entries and exits, because I believe they go hand in hand, right? You can't guess where the entry is. You can't guess where the stop loss is. They go hand in hand. So your entry and stop loss, it is because of a specific formation that forms, which gives you consistent movements. So whenever something happens and then you see consistently price goes up, right? It might do this first. It might go down first before it goes up, but consistently price goes up. Then you know that your entries are going to come from this, whatever formation that is. And automatically that formation, depending on how the move forms, that formation will also show you where is a good stop loss and where's a good take profit. So it's a setup. That's what a setup is. It's a setup, right? It doesn't matter whether you maintain 1 to 2, 1 to 3, 1 to 4 risk and reward ratio. In all of my trades, I try to maintain a 1 to 3 risk to reward ratio. So I don't take a trade if it's not 1 to 3, guys. I don't take a trade if it's not 1 to 3. I don't. Minimum, my RR, risk to reward ratio, must be 1 to 3. Minimum 1 to 3. I don't take a 1 to 1. I don't take a 1 to 2. Right? So it doesn't matter whether you maintain 1 to 2, 1 to 3, but this is how I've been trading for some time. So I prefer 1 to 3, right? So which means I do not force my stop loss to be 3 times my risk. I don't do that. It simply means that the 1 to 3 is going to help me filter out the good opportunities from the not so good opportunities, right? So for instance, if I find an opportunity that gives me 1 to 2, to me, it's not a good, it's not a good opportunity, not so good opportunity. But a good opportunity is the one that's going to give me 1 to 3. And again, it is not about forcing your stop loss and your take profit to give you 1 to 3. No, it is the setup itself. It is the setup itself. All right. So we then need to go back to setups and really look at our setups. Look at our setups, right? Because the setup, there are some setups. That's why I tell the guys in our classes that I don't just take any random trade. I don't just take any random trade. I can see an opportunity, but at the same time, I can see that this opportunity, it's not a 1 to 3. It's a 1 to 1. It's a 1 to 2. I can see that. And if it's a 1 to 2, I don't take it. Even if it goes to take profit, I don't take it. Because what's going to happen is the more you take your 1 to 1s, even if you want 1 to 3, the more you take your 1 to 1s, you're going to start developing a habit of taking 1 to 1 trades. It's going to be a habit. And for your style of trading, for your strategy, that might not be good. You see that? So we need to have the discipline. You need to have the discipline to only, depending on your trading plan, your risk to reward, to only take one, whatever your risk to reward ratio is, to only take those ones. We need to develop that discipline. And it goes with being comfortable with your setup. It goes with being comfortable with the setup. There's nothing wrong with the 1-2. There's nothing wrong with the 1-1 because it all needs to be part of your trading plan. It needs to be part of your trading plan. Yeah? So the issue of entries, it means you need to determine a setup. You need to determine a setup that gives you consistent movements that you as a trader can use to your advantage and develop entries from. So when it comes to entries, we don't guess where the entry is. We notice setups that gives us consistent movements, like even 8 out of 10, 6 out of 10, as long as it's consistent. And then we take that, we use it to our advantage, and then we create entries from that, or develop entries from that. So we're not guessing anything. So AV trader, look at your setups, right? Look at your setups. And what I always tell the guys is the best way to learn in trading is to go back to your trades. Go back to your trades and learn from your trades. Learn from your losing trades. Learn from your winning trades. That's the best way to learn in trading. So I think for you, AV trader, go back to your trades and learn from those trades. You're going to get to a point where you are able to modify your entries. And then the issue of a stop loss being too close. I mean, that is also part of a trading plan, right? A tight stop loss is a habit that is going to be a problem in the long run. It's a habit that's going to be a problem in a long run. All right. So, you know, let me put it this way. Let me put it this way. So you are trading a market or markets that you don't have complete control over. I see this all the time. As a trader, we are trading markets we don't have complete control over. So automatically, we should expect things to go wrong. But how do we survive when things go wrong? Risk management helps us survive when things go wrong. So that's why risk management is key, it's important, because it helps us survive when things go wrong. So as a trader, you learn that you don't control the markets. You don't completely control the markets. What you have control over is how much you're going to risk on a trade. That's what you have control over. What you have control over is managing your trade. That's what you have control over. But what the market does after you execute a buy or a sell, you have no control over that. So anything can happen. You know that your analysis can line up, right? You can find a setup where your analysis lines up, where your confluences line up, where everything lines up, but you still lose that trade. It happens. Why? Because of probabilities. It's all about probabilities. It's not about the outcome of one trade. It's not about the outcome of two trades. That should not define you. It's a series of trades, a good sample of trades where you are able to go back and assess. But one trade shouldn't define your trading. All right. So it's about probabilities. So a tight stop loss, if you understand that you don't have complete control over the markets, then automatically you should know that anything can go wrong. And by virtue of that, you must be able to give the market enough room to breathe once you've executed a trade. Enough room to breathe. Right? So have a look at that. 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 All right. Savage Boy, I always make good setups, but entries and else already kills me. Other man stop is tight. Yeah, I think Savage. Oh, wait, Sage Boy. Yeah, I think Sage Boy. I think your challenge is the same as the other ones I mentioned, right? So you say it's either your stop loss is tight or... Okay, now, there's nothing wrong in moving stop loss to break even. There's nothing wrong in that, right? That is part of trade management. Part of trade management. Yeah, it's part of trade management. We don't have control over. But a tight stop loss, guys, it's a problem. It has been a problem. It will always be a problem. Why? Because you need to give the market enough room to breathe. If you look at my gold trade, if you look at my gold trade, right, I didn't, this is not a tight stop loss. Look at this. It's not a tight stop loss. I executed the position here, and then I gave the distance of my stop loss is to give the market room to breathe. You see this week, if my stop loss was tight, this week would have taken me out of the trade. It would have taken me out of the trade this week if it was tight. But I executed the trade there, and then I saw that this is the previous high. So a good area for my stop loss is this previous high. And this is not a big stop loss. No, you are just using market structure. You are using market structure to find a decent stop loss. That's it. If I had my stop loss here, it would have been a problem. This would have stopped me out, and the market would have gone in my favor. So you need to give the market enough room to breathe, guys. Enough room to breathe, yeah? So with the issue of stop loss, I don't think it's a big issue. You just need to lower your stop loss a little bit. Lower it a little bit, yeah? Moeti, when price takes you out before reaching your stop loss, what might be the problem? So that could be spread. If you are taken out before the actual price hits stop loss, that could be the spread. That means at that point in time, the spread was a little bit wider. That is when you trade maybe during the news, during fundamental news, or in the AMs. In the AMs agent session, the spread is normally wider. So you would find that in most instances, your trade will be stopped out because of the spread. All right. So that's why I don't trade in the AMs. That is agent session. I don't trade because the spread is a little bit wider around that time. Yeah. Well, it doesn't happen every single day, but there are days where, for instance, you see this morning, let me show you guys this. This morning, there was CPI news out of Australia. CPI news out of Australia, right? And I can tell you, around that time, the spread was a lot. 3:30. That is Asian time. That's Asian time. I mean, that's Asian session, right? Of course, I'm sleeping around this time. I don't know about you guys, but I'm sleeping around that time, So that's the Asian session, and CPI came out, and definitely the spread would have been a little bit wider there, around that time. So whenever there's no high impact news, the spread is a bit decent, but because it's Asian session, it's a little bit wider than your New York and your London session, right? So during the Asian session, the spread is a little bit wider compared to your New York session and your London session. So I know that, I don't trade during these times. Even if I'm awake, I don't trade around midnight. I've never done it. It has never been part of my routine, my approach. So yeah, so that's exactly what happens. Yeah, great stuff. Can you please check AUDJPY? Let's see AUDJPY before we go to the second point. AUDJPY. yeah, I think we spoke about AUD/JPY at some point. It might have been a month ago, but AUD/JPY, we've been bullish. Just that, it wasn't part of my plan, but when we spoke about it, we said that I just have to go back and watch that session. But there were possibilities that once price breaks this low, it was going to create a low, and then it was going to go up. Why? Because of this formation. All right. So there was going to be a low that was going to form, which was this low, and then price was going to rally up. So this is, together with the other yen pairs, it's bullish. Together with the other yen pairs is bullish, and the target we would have would be around 114. 114. Yeah, there's the target. All right. So yeah, so this whole thing here was a correction. And now the correction is done. Now we're going up. So we are about to complete this impulse. Yeah. All right. Yeah, so that is AUD/JPY. AUD/JPY. All right. So let's get to the second one, guys. All right. So the first one is you must protect your capital. All right. Now, lesson number two is that you must always stick to your trading plan. Stick to your trading plan. Yo. Stick to your trading plan. Hey, this is important. Yo, this is extremely important. Stick to your trading plan. What is a trading plan? Well, and also remember, it has to be your trading plan has to be clear. It has to be clear, guys. It has to be straightforward, has to be clear, has to be simple. You must stick to it. Think of a trading plan as a business plan. How long does it take for one to create and develop a good business plan? It takes time. It takes time for someone to develop a good business plan. It takes time. So you cannot create a trading plan in a day. It's impossible. How would you explain that? It's impossible. What is a trading plan? Let me tell you what a trading plan is. Simple. It is a written plan covering your entries, your exits, risk management, and the market conditions that will give you favor. Or let me not use favor, but the market conditions that are going to give you an edge. So a trading plan is a simple written plan covering where your entries are, where your exits are, what's your risk management rules, and basically the market conditions that favor your type of entry. Hey, let me repeat that. Let me repeat that. The market conditions that favor your type of entry. Not just any entry, your type of entry. Do your entries work in a trending market? Do your entries work in a ranging market? Do your entries work in reversals? You need to know that. Simple. And you know what? You have to be patient with your trading plan. It's a business plan. It's a business plan. That's point number 3. All right. Point number 2. Point number 3. This is what many beginner traders believe, right? beginner traders believe there is a holy grail. There's no holy grail in trading. If you believe as a beginner right now, if you believe that in trading there is that secret, if you believe that there's that secret and then you're constantly looking for that secret, it does not exist, guys. There's no holy grail strategy. If someone told you that they've got a holy grail strategy, you must run. I can tell you this right now. If you've met someone says that, hey, you must pay me $5,000, I've got the holy grail strategy, you must run. You must run. Because it is not about the strategy. It's about the process and the edge. That's what it's about. It's about the process and the edge. Guys, I've been mentioning the edge for a long time. The process and edge. This is what matters more. This is what matters more. So if you're sitting here right now and you believe that, there is someone who knows the secrets. If you think it right now, I'm going to tell you this. It's a myth. It's a myth. It's all about process and edge. We are getting somewhere now. We are getting somewhere. We are getting somewhere. All right. Let's go to number 4. Psychology. Psychology can destroy. Now, I want you guys to listen to this, and I think you guys will relate to this. Psychology can destroy a good, well, let me not say good, but a profitable strategy. Listen to this. Psychology can destroy a profitable strategy. What does this mean? Let me break it down. I'm sure you guys have, you've had FOMO before. You've had greed before. Yeah, you've had FOMO, you've had greed before. I'm sure you guys have revenged trade before. I'm sure you guys have been overconfident before. Yeah. You see all of those things. If you are not, or if they're not in check, that can destroy a profitable strategy. So, let me give you guys a scenario. Guilty on all counts. I'm not laughing. I'm sad with you, Mark. I'm not laughing. But we've all been there. Now listen, guys. We believe that trading should be a systematic approach that you can repeat over and over and over again. Let me repeat that. We believe that trading should be a systematic approach that you can repeat over and over and over again. So by virtue that it's a systematic approach, that means any emotions attached to it, you know that it's wrong. If you enter a trade, but you've got fear, you know that you've lost it. If you in a trade and then you want to close because you feel scared, you know that you've lost it. So, I'm going to find a good example to explain this. I will find a good example to explain this. But psychology can destroy a bad trading strategy, right? I'm looking at the time. We're running out of time, guys, right? So let me get to the last one, right? So as a trader, backtesting and journaling, you can never skip this process. Backtesting and journaling will improve your trading. You can never skip this. As a trader, you can never skip the process of backtesting. It will improve your trading. Backtesting and journaling. I'm a big fan of backtesting. I love to backtest. I love to backtest. That's how I know I'm going to improve. I love to backtest. So to be honest, I'm human. I may not journal every single time, but backtesting, I love to backtest. So backtest and journal. Journaling, backtest and journal will improve your trading. So we are running out of time, but these are what I would say the five lessons, guys, right? That maybe some of you guys will give you an aha moment, right? You get that aha moment, that sounded weird, but that aha moment. All right, cool. So that's what I'm going to leave you with. We are still waiting for the market to move. Don't worry, just be patient. It's going to move. So while we're waiting for that, this is where we are. All right, guys, I hope this will help you. We have come to the end of the session. So the 6 p.m. session will just be a market wrap up. I don't think there's going to be much to do because we've already done most of the work. It's going to be just a market wrap up, right? So yeah, so let's wait for these to develop, and good luck. And yeah, Mark, take a screenshot of this, right? These reminders, take a screenshot of this. And I will see you guys next time. Yeah. Cheers. Have a good one. Hope you guys enjoyed. Subscribe, like, share, and I'll catch you guys later on. Cheers.
You